Let's talk some earnings now, and we start with Salesforce, whose shares are up 3% in pre-market trading. The company coming out, as you can see, with earnings and sales that beat analyst estimates. Earnings in particular beating by a pretty broad margin here. And Salesforce, of course, is one of the proxies that we look at in terms of business spending and IT spending in particular. And it looks like that spending is continuing to boost the company's numbers. Another note, of course, is that the company last month completed its purchase of Slack. So we'll be looking to get some more information on how that is going to continue to contribute to the company's numbers. It looks like the analyst commentary around this is pretty positive as well this morning. Brian Sozzi, what's your read on these numbers?
Well, one little nugget on the earnings conference call, Mark Benioff, CEO of Salesforce, he was actually doing the call live from Geneva, Switzerland. He was there attending a World Economic Forum event there. So good to see Mark Benioff back on the road, traveling, doing what he does, go to high-profile events and talk about the company and maybe close some business. But very interesting nuggets from this earnings call. And I think why you're seeing the stock up here in the pre-market, sure, it had some good things to say about operating margins and guidance in that regard. But really, some of the acquisitions that Salesforce has made, they're starting to pay off, and they're really starting to help them sell more stuff to large customers. They noted on the call last night, Tableau, acquisition that they made. That product was sold in 9 of its top 10 deals in the quarter. MuleSoft, another acquisition for the company, they sold products in 8 of its top 10 deals, so that is good. And now all eyes turn to Slack. In Slack's business, that deal just closed a couple weeks ago. That process integrating the company is well underway. Business for Slack seems to have accelerated for large customers in the most recent quarter. And I really think you're getting a sense that Salesforce is going to be going really head-to-head, even more than it has been with Microsoft. You have a Salesforce now with a Tableau, with a MuleSoft, with a Slack that really could be taking some market share from Microsoft over the next couple quarters and years. It's going to be a fascinating battle to watch over that time frame.
Yeah, I mean, the questions about Slack's, the competitive landscape for Slack are not going to go away in terms of Teams probably being its biggest competitor. So we'll see if indeed it does get more strength from being a part of that bigger entity. Let's talk Ulta, shall we? Ulta Beauty, the company raising its sales forecast, second quarter numbers beating estimates. As you can see here, again, another earnings per share beat by a wide margin. The company now predicting sales for this year of as much as $8.3 billion. The prior forecast, the top end, was $7.8 billion. And at same-store sales, it says this year will rise as much as 32%. So obviously, big gains there. Oliver Chen over at Cowen saying in a note in reaction, beauty is back. And Saz, as you noted to us this morning, Ulta also already has, of course, in-store salons, other beauty services, in addition to selling stuff. And it's going to emphasize sort of beefing up those services.
Yeah, and it seems to be a natural extension, I'll get to in a second, a natural extension of what they're seeing in terms of trends in their business. So makeup sales for Ulta totally very much continues to recover from the first quarter as masks come off and people go back outside and need their makeup. But makeup sales still below 2019 levels, worth noting there. But what they're continuing to see a lot of strength in facial care. And to that point, they're now starting to test micro-channeling, not too sure what that is, full and fair disclosure, never heard of that before. Dermaplaning, I have heard of, and hydrofacials. So in effect, I think they're trying to change their stores, or at least the service section, to be the dermatologist of the next decade. And why not? They have the space. Why not try to get these services? They're very high margin, and everybody wants to protect their face. I know I do. I get my eyebrows done. Maybe I'll try it at Ulta.
They look great, Saz. They look great.
I appreciate it. I take a lot of pride
something
in it.
else. They also called out that their brow business, their in-person hair and brow services, up more than 60% compared to last year. Certainly going to be a higher margin part of the business. And then you have people in the store, obviously more likely than to go and buy something to go along with that service. And I know it's a new part of the business. And I don't know, though. I would have thought 60% lapping a pandemic year. You would have seen a comp a little bit better than that, but certainly shows to the way that, as you remake those stores and you create more of those chairs to have those services, in there. Certainly going to be a growth driver. And there's one thing that we all know analysts love more than anything else inside of any business. Are you doing a new thing? You buy a new company, offering a new product, offering a new service, and does that thing have higher margins than the structural business? And in the case of Ulta, the answer, on offering these services is going to be yes.
Myles, I know you and I are supposed to play golf at some point, but maybe we could just go to Ulta and get facials together. I'm down if you're down.
That's great. Sure.
If that's happening, please send a camera crew.
Oh, you will get photos.
Do that.
You will get.
Julie's not a golfer. Julie's not a golfer. But if we're gonna go get exfoliated,
that's true. I could. I've never had a facial ever.
Team outing. This is great.
Have gotten my brows done, but that's a self-service now. I do that myself. All right, I just want to mention Coty since we're talking about Ulta, by the way, because you would think that the return of beauty would help a makeup cosmetics maker like Coty, and indeed it did last quarter. Those shares are up 6%. That company coming in with revenue $1.06 billion and topping estimates, and Coty has a suite of global brands that seem to be performing well. And up next, let's go to the Myles Udland trade, as he himself called it this morning. Williams-Sonoma out with its numbers, it too beating estimates, and we call it the Myles Udland trade because anyone who has watched the show for any period of time knows that Myles and I have moved to the suburbs during the pandemic, and we've been in the market for some new stuff for our homes. Williams-Sonoma doesn't just own its namesake brand, it owns West Elm as well, which sells furniture. And it is, and Pottery Barn, of course, as well. Comps at Pottery Barn, Myles, about almost 30% there. West Elm, 51%. So we know where people are going to get their furniture.
Yeah, and when you look at the size of the West Elm business and the Pottery Barn business, just the overall revenues, compare that to the namesake Williams-Sonoma, you're now looking at businesses that are 2 and 3 times as big, respectively, for West Elm and Pottery Barn. $732 million in revenues from Pottery Barn, $580 from West Elm, as you mentioned. 51% comp sales growth at West Elm, almost 30% at Pottery Barn. And look, there are many ways to play the suburban flight trade. You can, play it through housing. You can play it through autos. You can play it geographically. But certainly how you put stuff in your house, how a certain type of millennial fills out their home. You look at the stock chart of Williams-Sonoma, and it's not hard to see that this trade really sits at the center of it. And the West Elm stuff, I think it's fine. Right, I think it's definitely overpriced. I don't think the quality is really what it should be for what you're paying. But at the same time, you go to West Elm and it all looks right. It looks good enough, and I think that's why we got a bunch of that crap in this house.
Well, yeah, I think what you saw from Williams-Sonoma is really a lot of the same stuff.
Don't let your wife hear you say that.
Yeah, seriously, Myles. We're on live here, man.
Look, I'm just the chair right behind me. I don't know if you can see it. Oh, my IFB is sticking out. There's a chair right behind me. That's West Elm. That's a nice chair. It's a good, it's sort of like an Ames chair angle. So it's a good chair to relax in. But, we put some shelves in. I would have got the IKEA ones. Now they look nicer. But they didn't feel like all that much different but whatever. It's a shelf. We'll let it go.
Let it go, man. Just let it go. And I'll just quickly add, too, I think what we saw from Best Buy earlier in the week is the same thing we're seeing at Williams-Sonoma, that the pandemic, for some companies, has just changed their potential earnings power for the next decade. There are structural changes that a company like Best Buy is benefiting from. All this new tech gear, you use it so much over the next year, or you've used it a lot over the past year, you're probably going back trying to upgrade it and finding new cool things to help improve your work situation. Same thing for Williams-Sonoma. Sure, maybe you're not buying a new couch this year if you bought one last year, but maybe you're buying some new lamps to further fill out the look because you couldn't afford those lamps last year. So that is benefiting the company. And also, too, lastly, and I have a bigger story on this on Yahoo Finance's homepage right now, another company, another retailer giving a lot of money away to shareholders. New $1.25 billion stock buyback, increases the dividend 20%. Yesterday, we saw Dick's special dividend of $5.50, repurchasing more of its shares. So some of these retailers that are fundamentally strong, a lot of cash on the balance sheet, they're giving it away.
Yeah, and that also, buybacks, that is, broadly happen to be the subject of the morning brief, which we are going to talk about in the next hour. Finally, let's round it out with Abercrombie and Fitch. That company I believe was bouncing around a little bit in pre-market trading. Revenue coming in at about $865 million. That's below the $879 million that analysts were predicting. And digital sales fell by 3%. Really interesting here. The CEO saying in the commentary that sales held pretty steady. That was the way she was sort of spinning that, and they represented 44% of total second quarter sales. Soz, what do we think here about Abercrombie?
I have no knocks on this quarter from Abercrombie Fitch. I can understand why the market is sending it down here. The stock did trade higher into this quarter. The stock has also been trading near, I believe, a 5-year record high according to Yahoo Finance Plus data. And I know, one of our producers, who I won't name here, I won't put them on blast, maybe not feeling some of the new styles out of an Abercrombie Fitch. We'll save that for a different day. But overall, this is a company that grew its gross profit margins by 590 basis points year over year. Operating margins up more than that because they've closed hundreds of stores, exit flagship locations. And they join the parade of retailers that have come out saying that August so far to date is off to a strong start because of a strong back to school.
I like that rule, Sozzi.
Contribution notwithstanding. Sorry, go ahead, Myles.
No, I like that. I like that rule of we'll leave people's names out when they don't particularly find themselves enthused by a brand and don't spend money there, right? So if I'm lodging my sort of lukewarmness towards the West Elm catalog, I'm also admitting I spent a ton of money with them, so I'm allowed to, air my grievance. But if you went and then didn't shop at retailer X, you can't then come on air and identify yourself as having done so because you didn't like the selection.
Yeah, I think this unnamed person, while they love Oatly, they spend a lot of money on there. I think they actually want to spend on Abercrombie Fitch and Hollister. They just didn't find anything they like. But I don't know if that's view is generally shared just looking at this quarter. Sales up, all in all, pretty good.
Names have been withheld to protect the innocent. I don't know what this is. All right.